So now let's go into a daily. Boom. So with this right now, we see we have this push off of this daily imbalance, or this, consolidation. And off of this consolidation, this is yesterday's candle. And now we have our candle for today, which is going to this inversion that we had, the first inversion that we had on the daily. So this is a spot or area of interest where it can be resistance, because remember, we're also above the 50% level of last week's range. So we'll be looking at how price is going to play out when market opens. And then for the 4 hour, we bounced off of this key level yesterday, headed to the upside. So now, so far on the 4 hour, we're starting to get this consolidation here. And then from here, see how price plays out with this consolidation here. So stay aware of that. And it's a clear expansion. So when we have expansion, I'm expecting consolidation automatically. So for today, I'm expecting consolidation, no matter what the day gives us. And then from there, I just build off of that. And then let's look at 1 hour really quick. With the hourly, so we had that consolidation yesterday. We had this range that we were in. We had that expansion up, and then as you see, the same thing the 4 hour was saying, same thing the hour is saying. So we have this consolidation. So we have 8 minutes till the market opens up. So I'll be back when the market opens up, so we can go ahead and get to it. So I'll be right back. let's get it. Market is about to open. Let's go ahead and get to it, fellas. So what I'm looking at right now is obviously consolidation. We see consolidation happening right now. So just see how the market opens. Like a rule states, even if I see something, an opportunity, when the market opens, I still wait. That's the patience part in it. So let's see. So just looking at it, we gotta have this high in a 15-minute swept. So it would have been this high here. Keep that on the low. So clean shot down to the lows. Taking our Asian range low. We're getting that volume, man. That's good. The best thing in the market right now is we're getting this volume. That's the best thing. So let's see how this price continues. If it does. So we see we have this 1 hour imbalance right here. That price can stop at right now, sweeping this low. So let's see how price plays off of this imbalance here. So regular hour imbalance. Nothing crazy. Actually, let me use the 15-minute instead. Since they're pretty much lined up. Okay. And that, having, like I told you guys before, having that rule of not taking nothing when the market opens, a lot of times you can see so many things that are so interesting or intriguing for you. And there is nothing wrong with taking nothing when the market opens. That's my rules for myself. Because like I told you guys, you have the foundation. You guys have the structure you need to take proper trades and look to see where you're at. But for me and for my strategy for myself, just mentally, that's something I have to restrain myself from, taking trades in the opening. And for the ones that don't know, so I don't take trades on the opening, the first 5-10 minutes of the opening, just because I want to wait and see how market plays out. And I'm usually trading earlier in the morning, so way before the market opens. So adjusting how you see the market then to when the market opens is completely different, because you want to wait for the manipulation first, if there is manipulation. So wait for that storm to pass. Once that storm passes, then go ahead and you fine tune what you're looking for when it comes down to for entry. So keep this on 5. Super long wick. Let me scoot this over a little bit. Okay. There we go. All right, so got this 15-minute push into the downside. We're getting this large wick, but we want to see how this 15-minute is going to close. So looking at where it came from, we've seen it obviously took that high, and then we punched to the downside. We had these wicks with showing price like it wanted to reject off this imbalance here. So people could have thought that it was going to be bullish because how prices had this heavy rejection here. But even when you see candles like that, don't let those deter you into thinking that something else is happening. If you look at a higher time frame tells you what you want to see, then you want to follow that. And if it's not in sync with that, then you just simply wait. So people have a problem with the market opening, and then they'll see that initial push and they're like, man, I should have caught that. It's like, no, just sit there and wait. You'll you'll get opportunity, and if you don't, you don't. Cool as that. Okay. See how this 15-minute candle closes. Since we got this expansion here, you can have 5 or 3 minutes start to consolidate, and then it's giving you it's like a reset button when it comes to the market structure to get gearing up to do something else if it starts to consolidate. But if it doesn't, you just simply wait. Okay, there's that rejection off that 15-minute imbalance. Let's see if it holds though. Look how that candle is printing. That goes a long way. If you can tell how a candle is printing, like this candle was super bullish and they're super bearish. But if you look at the candle right now, you really can't tell unless you went down to a 5 minute. But then you'll see a 5 minute. Let's say this candle is closed and you've seen this. You're like, okay, it pushed up super hard, but then it wicked down. But how did it do it? Well, at that time, it was showing the signs as if it wanted to push up out of this imbalance, and it didn't. So now if it does actually push up out of it, it had a chance to get to the downside, but it didn't want to. So then we play off of that. And then let's say once this candle closes, I can look at the midpoint of this candle, see if it goes above it. Like there's so many ways to look at it once it's playing out, but you just want to remain patient. That's the most important part. Let's see. This is a nasty push down. Consolidation here. So I can even look at this. Let me look at this consolidation here. Just to see how price line up with it. Here to here. This consolidation. Let's see. Look at that. Just tapped it. So, that consolidation in the Asian range yesterday. It went down, tapped it, taking up that low, pushing to the upside. So, what is that good for? Confluence. So now that we have that, let's get a sync of what's going on. So we have this push up, let's say the 3 minute creating any imbalance. Yep. Right here. Get that rejection up. Okay. It's a lot of risk though. So I'm eyeballing this consolidation right here too. see if the 3-minute keeps this open. But it's inverted now, but let's see if it keeps it open. So it'll be there. And then this was 15 minute. All right. Yep, 15-minute consolidation. Let's label that 15-minute. Let's see how this 3-minute plays out. It's a lot of risk though. And it has all this to deal with, even this consolidation right here. You see how he broke this high and swept that low? Okay. Let's see if it makes this confirmation. This would be a lot of risk though. It's not a lot in terms of points. 37 points, 38 points, it's a lot. But you can adjust that through contract size. It's just the take profit, because you'll be going for these highs here. And from there, it's almost a 1 or 2. So yeah. Now trades like this, or where it has like a bigger risk, I wait for it to dig inside of it, if that makes sense. So if you don't, if you're not trying to accept the risk, that much risk, then you know where the initial stop loss needs to go, which is all the way down here. There. Three-minute. Let's see how that plays out. Your first like smaller target would be here, and that's just right there. That's not even that far. And then you look at this body, right? It's always a reason why something did something. So you see this body, and I'm like, yeah, look at the midpoint of this. So I don't want to jump the gun. You'll know when you have a clean one versus one that's going to have a tough time getting past certain things. You have all this consolidation right here. You got this swing high that broke this swing low. So this is the price level that's in right now. And you will want something like this to be lower, because if you look at that high, this high to this low, that whole thing is inside of a premium. So think about it, all this risk, but if this was here, then it'd be a better opportunity. Now, could there be one on the lower time frame, like a 1 minute? Yeah, but you don't want to entice yourself by trying to find something unless you feel as if this is what you was looking for. If this is something that you were looking for, then by any means. Okay. And then now that this happened, let me see if something would have transpired. So you would have had this inversion here, and then this trade here, and what is this low? If you would have had limit order there, I think you would have not got filled. This is 341.75. This is 341.75. So unless you seen it and hit buy right when you seen it, but if you would have had a limit order right there, you would never got put in. Now, let's say this is your trade, right? For the ones who took it or were looking at it, even if you had a lot of risk in the beginning and price starts to take off, you want to find things that you can anchor on to help you with your confluence that this is going to continue. Because if you don't find that quick enough, then you're going to deal with the fact like, okay, this is going to do this, this is going to do that. This breaking the midpoint of this wick is a good judge of character when it comes to confluence. Because what happens is, even though you break the high, this can just be the high, and then price will come back down to the low. So if it breaks this high and then the price starts to come back and it starts to sit at this midpoint and consolidate, then you can probably have expansion continuing up. But if it broke that high and then went right below the midpoint and then back down to your entry, then just break even with it. That's the best thing you can do in trade like this scenario. But you also have to be okay with you taking a trade like this and then you seeing the risk. And if it starts to go in drawdown, either you're dealing with the drawdown or you're cutting it off a whole lot earlier. Did anybody take that? And then look, you got this sell model here, right? This inversion here. And then this confirmation here. So if you were looking for sales, this would be something you'd be interested in. But if you're in that buy, then you want to see this broken. You don't want to see a hold up at all. And that'll be a good sign for you, which will be just the initial stop loss being broken above as a continuation. So this is when you're seeing a model that's going against you work in your favor because you want to see it broken. So a model, even when a model doesn't work out, you can still use that model as a confluent. You can mark it up as if you were taking a sell, but you're not looking at it as a sell. You're looking at it as price failing there and then have a continuation. Or you're looking at it as, okay, price gets to this area. This can be an area where price can have problems or complications. And then when you start to see it's respecting that area, then you can close your trade and take what you can take. Because from here to here is 40 points. So 50 points. And then, yeah, your initial risk was 38 points. And you had to risk a little bit more for cushion. But if the trade takes off right when you get in, did you risk 38 points? No. The only thing that the 38 points probably did to your trade is adjusted your contract size, so you didn't go as heavy. But when you're able to know what you want to risk based off the trade, you can take whatever you want, even if it's a lot of points, because it's all based off your contract size. I stick to a certain contract size, so I want to see a certain amount of points to risk per trade. But somebody that's just looking for the opportunity or the setup, you can base it you can base your contract size off of how many points it is and go off of that. So this is 38 points. Let's say you're somebody that does 2 minis or 2 micros. Just put it in micros. Let's say you do 2 micros. You're like, I usually do 20 points. This is 40 points, so it's double. So instead of me not taking it, I still want to take it. So let me just do 1 micro instead of 2. But that's you cutting your risk in half. Like you're cutting your contract size in half, but you're doing the same risk. So now you got 2 different types of opportunities. Now let's see how price is dropping out of this sell model, and let's see how it touches the midpoint of this wick. So put this in the folder as well. And that's what happens when you're in a tight range where price is consolidating in a range. Okay. Remember, you want to stay as organized as possible. So throughout this 3-minute chart, we found the range where prices is consolidating. And even in this here, you can look at a billing range between 2 ranges. And technically, once that candle closes, it'll be this range here. So price goes back into here, it'll be a discount. Price goes back into here, it'll be a premium. So you got 2 opportunities, up or down. It's based off what you're seeing and what you're looking for. But remember, I was expecting consolidation anyway from the beginning because we had expansion yesterday. So this back and forth in the tight range doesn't throw me off and make me feel like, oh, I'm missing out. No, you're in a tight range. And if an opportunity comes inside of a range that you're looking for, you take a small opportunity, take what it gives you, and you walk away. A lot of trades like these, where it's a tighter range, that day where price doesn't really know what it wants to do, those type of days are days where it takes off, and as soon as it takes off, you can break even. So even if it comes down and stop you out, you still broke even, and the only thing you lose on that trade is commission, and you gain the experience of knowing how it was flowing, monitoring it, documenting it, all those things. So back up to that sell model. Look at the midpoint of the wick. Price came right down to it and stopped, and then we're pushing right back off of it. So remember, your key area is this initial stop loss. You're trying to see if that's going to be broken. See what this candle does as I break it. And right when it breaks it, and if it holds above, that shows confluence for bullishness. Just looking for the right opportunities, that's all. Okay, right back. Okay, I'm back. Whoa, look at that drop. Look at that drop. And doesn't that drop make the most sense? Because it's even though you see it's bullish at the time, it was in a premium. So it made the most sense. The one that wasn't in the premium at the time, yeah, it could have played out, but at the same time, look what you had to deal with or encounter for it to even play out. So that's why it's important to know or look at both sides of the market. Look at it from both perspectives. Because once you go in one-sided, it throws you all the way off. And you're just chasing at that point. That was and this model is still holding up because the initial stop loss hasn't been broken yet. Either one. Okay. Since we are at the confirmation towards the bottom. Now, the confirmation to the bottom, are you referring to this one? Okay, so this whole model is still in play, just as it is, even though we broke below it. And this is still inversion because it was bullish and it closed above. And then this was the confirmation confirming that. Now it is inverted, but even with this whole model is still in play. But that's what I was telling you guys about the initial stop loss and then the confirmation and the inversion, the distance between all of them. Whenever you have where this initial stop loss is so far away from the confirmation because of the candle size that made the confirmation, you're going to have things like this where price breaks below it. And even though it is that this confirmation technically still is now inverted, you can either wait for more confirmation in a better price range. So what I mean by that is you have this high and then this low. Well, it was this low, but now we have this new low. So now what it does is it puts this inside of a premium because this was a low we anchoring at first. And then now we have this new low that we anchored to, or swing low. So now this puts it inside of a discount to push up. And even though we did break below it, initially it was confirming the inversion and confirmation. And then we're breaking back above it. So now if it would have just broke below and went below our initial stop loss, then now that whole thing is invalid. So when we're looking at the inversion and confirmation, it's that initial inversion and confirmation. And then after that, you can have it to where price blows through it. And do I favor that more? No. Like you're asking, that's an inversion as well with the confirmation. So when you have something like that, I'm not more enticed to take it if I was before. I'm even less enticed to take it because I don't want to deal with it. So the question that you're asking is it still valid? Because it basically is now inverted. Yes, it is, because the initial stop loss hasn't been taken out yet. But do I feel more confident in it that it came back down to it and broke below it? No. Right there is just like, for me, this made more sense. And then this move off of this sell model, when we came down, we had that expansion down. We can just consolidate here, and then we'll be dealing with back and forth the whole entire time. And then what if price blows through here? The only thing that can keep you in the back of your mind that this could play out is because we're off of the 15-minute imbalance that's sitting here, and we could potentially bounce off of it. But based on where it's at and how it's playing out, how bad do you see it playing out? Now, I don't see it playing out that big at all. And because look at this 15-minute candle. This 15-minute candle is bearish right now to the downside. And we got 2 minutes to this candle closes. And remember, I was telling you guys the last couple of minutes of every candle of every hour, 15, 1 hour, those last 15, 5 minutes, that's where you get that volume at. So if you know what to look for, what time to look for your trade, then you know what time to look for the right opportunities. So you want to see things become invalid, or you want to see things get scratched off, because guess what? Once this initial stop loss is broken and price goes to the downside, now you can cancel out this inversion and confirmation and initial stop loss and wait for a new opportunity if it gives you one. But just hanging your hat off of this one, like let's say price push to the downside, you really want a new ceiling to be made to be inverted. That way you don't have to rely on this one no more. You can rely on the new one. So that's what you want to see. But the way that the 15 minutes looking right now, look at how bearish it is right now with 2 minutes left to close. But if you get a strong wick to the upside, a strong close to the upside, that can show possibilities in that bullishness coming in the next 15 minutes. But we're off of this 15-minute imbalance. So that can happen because we're just punching down to it. But the likelihood of me looking for this to play out, no, because I already broke it. And we seen that from the get-go, because when it first took off, it's like, it's cool, but it didn't have the right parameters. And then you had the sell model, which had the right parameters, but we were coming off of this 15-minute imbalance. But we're also knowing that the market is in consolidation, so this can just be a range. So just think about it. You had two different opportunities to take a buy or a sell. You're seeing both. It's just which one you want to take. I don't feel enthusiastic to take any of them, but that's the thing. It's the way that I'm feeling about a trade, because I see it. I'm gonna show you a bunch of them, and that's why it's just like, if you're having a bearish or bullish mindset, you can cater to both. It's just which one is in your favor at that moment of time. Well, in this case, the bearish sell would have been in your favor, even though you see the market as being bullish from a higher time frame. This is for a moment in time. This is just a range. And then once price breaks out of this range and makes a new range, boom, we do it all over again. So think about the market just opened. We have all this traffic. Where's all this traffic going? Right now, nowhere. So you just deal with the range and trade off the range. Okay, so 8 seconds left till the candle closes. Boom. Okay, let's see how this initial volume comes in. So now you see how we hit this initial stop loss here, right? Let's see if this ceiling right here stays open, or does this candle close it? Looks like it's going to close it fairly quickly, but we'll see. This is you staying patient, waiting for the right opportunities. But you see how you can have so many opportunities play out. You can even have, let's say you took everything. This was the first trade you took. You had a lot of risk at first, so you had to drop down on your contract size. It pushes up to the sell model. You favor the sell model more. You close out on the buy, and then you target the sell. You use the amount that you made for the buy to use for the sell. Now that sell is even a free trade, because you're using profit that you did from the buy to use for the sell. So if from here, this confirmation to this confirmation was 34 points. This risk was about, so we'll say from the initial stop loss is about 17, 18 points. And then based off where you were looking to take it to, that'll be your take profit. So like at that moment of time, you had this low. So from here to that low, that's 36 points, 37 points. So what that 17-point risk, that's a 1 or 2 is trying to give you. So now you're using that take profit that you took for the first one on the second one. And then you can either add to it and make it a bigger trade because you can use your initial risk and add on to the risk that the profit that you just gained, or just use the profit that you gain only and then be done with it. And then even like in this scenario right now, you're sitting at this initial stop loss. If price is sitting here and you feel like this is the buy that you're looking for, you can drop down to a lower time frame and look for the opportunity. But you have to be aware that you're in a key area and how the trade is playing out right now, or the market's playing out right now, that cannot work in your favor. But if you're okay, or you're okay with the risk, then by any means. But the main thing is being okay with the risk, because that's the main thing. So if we go to the 1 minute right now, do you see anything that can work in your favor? Well, the only thing you see at this moment in time will be this right here, but it's not even inverted yet. So, and then you have this same thing on a 3 minute. It's real tiny. And then there's that push to the downside. And then once this candle closes, then you can remove the thought of this. So boom, candle closes. You can remove this. You can keep the initial stop loss there to remind you that that's what it was at once upon a time. And price may break back above it, and you can use that as confluence to help you determine if this is going to be what you're looking for to continue back up. But as towards looking for the inversion and confirmation, you don't need it, because now you're waiting for price to make a new one, because you're getting that expansion to the downside. And you keep it simple. So now even with this daily range, you can take it off and just wait to see how that 15 minute sets up. Or if you're looking on the 3 minute for your opportunity, just wait for the 3 minute to show you what it wants to do. But you're not rushing anything. Most people get upset that the market is not doing anything, it's consolidating. It's not going anywhere. Yeah, because we just had expansion yesterday. So if you're already expecting this, then nothing is throwing you off. For me, I would take it off. I want to keep it on here, just kind of remind you. So I'll keep it on here and I just label it old. There's that push up. So remember, you're having this push up. You look on a 1 minute, you had an inversion. Technically, you have an inversion here. A little tiny. There. But this is you penny pinching. You have to remember that. So you have an inversion here. You're like, okay, if it holds up, it holds up. If it don't, it don't. This is you just simply following price until it gives you what you're looking for, because you're still inside of this 15-minute consolidation. So if you're looking for a buy opportunity, you still have hope. You just need to get in sync what's going on, and if it's not there, it's not there. So you can follow on a 1 minute, you can follow on a 3 minute. Just know what you're looking for. So now that you have this inversion here on the 1 minute, just see if you get confirmation to the upside. Then go back, and then you know what you're looking for now on the 1 minute. Just looking to get above that high of the consolidation. So this will be 1 minute. Keep that on the 1 minute. you're not concerned about, oh, it's supposed to go above and continue up. No. If it happens, it happens. If it pushes down some more and makes another imbalance, and then it inverts it, then and then it inverts it, then you mark that up. As such, you just know that you're in the area in which you're looking for something to happen. That's the key thing. We also have this 15-minute imbalance you can look at here. And then right below that 15-minute imbalance, what do you have? More consolidation. But as price breaks through this, you don't look at it like, oh, I should have did this, should have did that. No. We don't look at market like that. We look at market as it's flowing, and as it's flowing, we just get in sync with it. And all this came from that sale. Like, this sale don't even look crazy. This is a 100-point drop. So that's that volume. We're getting good volume in the market. That's always a good sign. Wait to see if we get a push off of that imbalance. We'll continue to the downside. Down. And then you see on the 1 minute too, that imbalance still all the way up here. There is no other SIBI as of yet. Remember, this is the 15-minute imbalance too. So even though this 3-minute close below it, doesn't matter. It's about the 15-minute. And remember, we are coming off these super high levels. So these drop downs make sense. Even though the market is technically still bullish, we are coming off of these big pushes up because we just took out this extreme low and now we're just in this whole range here. And price is bullish for the moment, but overall, we look at the range. And we're sitting at premium. Well, now we sit back in discount, but just things like that. But you don't want to look at the overall picture if you're focused on just what you're looking at for your session. You can have an idea of what's going on, but the main thing is what you're looking at for your time that you're looking at the market. To that candle closes. See this 15-minute candle wicks back up into this imbalance, or we're going to continue to the downside, breaking this consolidation, but we are inside of this consolidation. Let's see, so we can look at the midpoint of this swing high here. And the reason I'm looking at this swing high at midpoint is because I'm looking at this consolidation. I'm trying to see what this consolidation is resting on, and to me, just by looking at it, seems to be this, and it is. Yep. Let's go ahead and drag that over. Boom. And this is you just finding confluences. That's all I'm doing is finding confluences as the market is printing out. Seven seconds left. Let's see how the body poses inside of the imbalance. From being so bearish to now and then flip the script. That 1 minute. So now on the 1 minute, you have this inversion here, and then this possible confirmation. have two of them. That one. So initial stop loss there. This is a 1 minute. So initial stop loss there. Look at that. You had that huge rejection on the 15 minute, and then this very next 15-minute candle was extremely bearish. You don't go chasing the market. You just let the market come to you. Down, prices continue. So now that you have this one model fail, that can be signs of a continuation. And then look how that 15 minute would have played on your heartstrings because you're looking for the 15 minutes to close and then punch back above. But that's why it's important to look at what price is doing and flow accordingly because you're in the consolidation market. So you looking for it to expand right up. That's you looking for it to be just stuck in this consolidation range when it's ready to have expansion to the upper downside. In this case, the downside. So since this is broke, remove that. Like I said, you just following price. Let's go look at 3 minute. There's that punch down. If this candle closes here, you're going to see if this candle closes below this consolidation, how it retests into it after it closes below it. But But if it doesn't close below and it pulls back like it did just with this last candle, then you just chalk it up to this consolidation and you go accordingly. But right now, this expansion is happening to the downside from that sell model. And then your confirmation that it would have held would have been when it broke this initial stop loss. Nice push to the downside. Look at the hour real quick. That huge rejection up, like you want to be bullish in it. Boom. And you can even look at that 1 hour consolidation here, but now that we have this expansion, let's put this back on the 15-minute, that wick here. Keep that there. Let's go 1 hour. Let's go 4 hour first. So 4 hour. This is a 4 hour candle. We had that consolidation. We're breaking out the consolidation. Super simple. And then we have this inversion here on the 4 hour. And then right after this inversion, you have this confirmation and this one. So this is can be a buy model pushing to the upside on the 4 hour. So higher time frame, and then we have same sentiment when it comes down to the 1 hour, but here your inversion will be here. So this here, and then you had this push up here, this expansion here. So this is the original confirmation, and then you have one right here as well. So see how far this runs down for today going to tomorrow, and then once it bottoms out, then you get that small consolidation going into Wednesday, and then Wednesday can be some expansion. But it depends on how this expansion plays out, because this can be, if you look at it from a daily standpoint. Remember, I was referring to, for the ones that wasn't here in the morning, I was saying how we had, if you go weekly, and you look at the range, this whole range here, if you go to the weekly, turn it on, boom. This is 50% of the entire range. So this is the midpoint of the entire range of last week of this candle here. So we wicked into the premium of this candle of last week here, and then we got this initial drop to the downside, which is falling into what? A discount. So from there, just see how price bottoms out, where it starts off at, and then continue the push back up. And then even, I would say, it's not a cheat code, but something you can see when it even comes down to the weekly is, so you have this push up here and this push down, and then this candle here that's not done printing yet. You can look at the midpoint of this candle to see how far this candle is going to retrace back down. So here, because these are the three candles that would have made imbalance anyway. But looking at it the right way, don't look at it as that, because it's not imbalance. So let's make that. I'll make it like a bright orange. I go down to, let's go down to a 4 hour. Look at that. So there we go. Let's see. So here, and that is inside of this imbalance here. So you're gonna see how far price falls before it hits this line, which is 23,170.25. Okay, so I will put that in that weekly folder. Back to 1 hour. Go back to a 15-minute. You want to be able to put the story together. How does this drop make sense? And we found out how. But the way we found out how is not because we said, oh, you know, this already happened. We seen the whole thing happen, and it happened off of a model. We had a buy model, we had a sell model. We marked up both. Buy model played out for a certain amount of time, and then the sell model was this big drop down. The model is always there. You just got to know where to look for it at, and which one you want to take based off of what you're seeing. So there's a multitude of opportunities. Crazy drop. Almost 200-point drop. Right off the sell model. Well, we're gonna let this one bottom out, fellas. And then once it stalls off, it's gonna take some time to consolidate anyway. So then once it consolidates, you wait for that opportunity. And if it presents opportunity later on, you just wait for the next day. Do not rush it. You've seen what transpired today. Take that same mindset or concept, and you see how you were in a range. So we have both models play out. It's just based off which one you wanted to take and what were you seeing based off of that time. And you build off of that. So don't overthink it. Don't think that it's not going to play out. Just look at the risk associated with whatever you're looking for, and if that risk is suitable for you, then you take it. Simple as that. So go ahead and kill it. Let's go kill it tomorrow. I'll see you guys Wednesday.